There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB on this Wednesday afternoon, the 20th of August, kind of hitting peak reporting season now. It's a pleasure to be with you. I'm Nadine Blaney. And from all the team here at AusBiz, check this out. We had an interesting day, I think, on market. Not only did we have so many results to digest, but our market for a large part of the session was outperforming regional markets. Now, if we take a look at the CIBO Australia Index, we've seen a little bit of waning in sentiment toward the market. But yeah, as you can see there, pretty positive session for the good old ASX 200. I'm just looking ahead to US futures and seeing what they're doing. Early in the session, they were lower, but yeah, seems to still be coming under a bit of pressure. The Australian market, though it lost some ground, the S&P ASX 200 is still up by about 0.3%. So yeah, the CIBO, not today a mere reflection of what we're seeing there on the ASX. So let's get across some of the themes that we'll be watching closely today. And I think it's really fair to say that some of these big results that have disappointed have absolutely been whacked. Yesterday it was CSL. Today, James Hardie came up against a pretty tough crowd, a crowd of investors, some of which were already a bit put off with that massive acquisition happening in the United States. And then it failed to read the slowing housing market, which many would say the writing's been on the wall for quite some time. Now, today, what helped propel this market higher, look no further than the big banks. So we have NAB up by 3.4%, ANZ up by 2.25%, Westpac up by 3%, and CBA in positive territory as well. So you could call it a bit of a bank bonanza. But we have seen Bitcoin slumping. Don't forget, we did see a lower session on Wall Street overnight. There's a lot of consternation as to what will come from this Jackson Hole Summit later in the week. It's a central bank talk fest. We'll be hearing from the Fed Chair, Jerome Powell. Will he push back on the prospect for interest rate cuts, and what will that do to sentiment? So yeah, a little bit of pressure coming through on Bitcoin. Here's a snapshot of the banks. Didn't need to read it out to you earlier. We can see it on screen now with these sectors, with CBA up by 1% and NAB up by 3.5%. We covered ANZ on today's episode of The Call, if you'd like to have a listen to that, with Henry Jennings and Andrew Feitland from DP Wealth Advisory. The retailers have been looking pretty good today. Wesfarmers up by 2.7%. JB Hi-Fi, check it out, $120.70. Hart Meyer is the exception to the rule there. Now, look, the miners were coming under a bit of pressure this morning, still are. In fact, we're seeing some pretty steep falls coming through for lithium names. Linus is down by more than 7%. I wonder, yeah, let me just see what's going on with Linus. No news that I can see. For a second, I thought, is it trading ex-div? Should have mentioned that Commonwealth Bank is today. The gold miners also coming under pressure today, although Evolution Mining has picked itself up off the mat. It's now at $7.98, but Northern Star still down by about 0.25%. And Santos, bit of a delay we're hearing about when it comes to that big Middle Eastern takeover of the company. Shares are down on the back of that news. Woodside Energy, we spoke with Meg O'Neill, Woodside CEO today, holding strong with the dividends, calling for debt discipline as it hits its peak, perhaps with major capex spend. But shares rose today, up by 0.6%. Now, I do have a guest here with me in studio, Mark Gardner from MPC Markets, but I'm just going to run you through some of the top corporate stories briefly. Look, the results were coming in thick and fast, but none have generated as many headlines as James Hardie. A whopping near 30% fall after it flagged those weaker earnings. Breville also coming under pressure, warning of higher input costs for US products, tariffs being blamed. Interesting to note that the CEO says, look, this is not our first rodeo. We've seen and we've been through some tough times before. Think COVID. All right, Stockland jumped to a 17-year high. Its shares did on an FY25 profit surge. We spoke with the CEO. There's a little bit of a data center play in there. You can find that interview online at ausbiz.com.au. Still in the property space, Vicinity Centres hit a 5.5-year high as its profits surged. APA Group rose on stronger annual earnings forecast. Transurban was up on higher full-year earnings and an upbeat outlook. Lottery Corp hit a record high on annual results. They beat expectations. Magellan Financial hit a 6-month high on what's being seen as upbeat annual earnings. Retail Food Group has slipped as the company swung to an annual loss. And ServiceStream hit an over 4-year high on strong results and an outlook. Up by 8% there. Now, Superloop, I did speak with the CEO. It fell at one point nearly 16% on an underwhelming full-year revenue line, although he's pretty confident on the outlook going forward. Pretty high expectations going into that result, I've got to say. Lycopodium picking itself off the mat as well in the wake of its results. Step one, we just spoke with the CEO. Pretty negative outlook, and shares are off by 25%. Lynch Group, though, not only did it hand down upbeat full-year results in the smaller end of town, but it's also agreed to a takeover by private equity. Now, CSL extended its losses today. Jefferies, for one, cut its price target on fears about the state of the market. Seek jumped after Jefferies upgraded it to buy and lifted its price target. And after getting whacked yesterday, HMC Capital was upgraded to buy from a hold by Morgans. Whew. That's actually not even all of them, believe it or not. And it's not going to slow down tomorrow either. Welcome to the COB. Mark Gardner from MPC Markets. Legend for coming in on a day like today.
Well, apart from the rain, but it's certainly a bit mind-bending trying to keep up at the moment. The pattern seems to be if you disappoint by that much, you get whacked a lot.
Much, yeah.
And if you impress, you've really got to impress to go up. We've even seen a few that have actually beaten expectations and then still got hit. So. Our stance just after the last earnings season was just generally we were better. We saw that pattern emerging in the February earnings. We were just better off trying to pick an overreaction, say like the CSL or the James Hardie. I think whilst they've had James Hardie today, but I'm sure there'll be follow-on selling tomorrow. We just don't seem to bounce back in a V shape anymore on a 2-day basis. But that day 3. We saw BlueScope, it got hit 2% a day for a couple of days and now has recovered about 3% today. And in the small cap arena, it's obviously very thin in those in some of those areas as well.
Well, that brings me to Lycopodium because you guys wrote about it in our COB newsletter the other day. It was down early in the day.
7%
And then now it's up. So does that speak to this sort of... liquidity in some of those smaller names?
Yeah, look, if you react to a headline without going into the detail too quickly, in those small cap stocks or in those mid cap, it's only about 400 mil market cap, it's really illiquid. On the flip side of the coin, Energy One is one that we've got in our small cap side conviction. It's probably one of our best over the last 18 months. I think it's up about 150% and we were buying more recently around the $12.50 to $13 mark. It slipped back from its highs and it's spiked up 8% today on, again, not much volume, but so there can be some opportunities there. But the unfortunate thing about Aussie earnings is that now we've got to wait till February, and if you manage to load up on something that's taken a hit like James Hardie or CSL, it's a long old wait until you're going to get some form of catalyst for a turnaround. The quarterlies don't seem to have the same gravity. We've been playing the range in CSL for 5 years, and so we're very much well ahead. We trimmed before earnings, mainly for seasonal risks, because I think September, where every metric at the moment is showing overvalued. I think the US economy is slowing, and I think we're in for a pretty rough September, October. So we were more sell side anyway. But thank God we were with CSL, because we probably would have waited till 290, 300.
Yeah. Well, CSL's an interesting one, isn't it? I spoke with Jonathan Takadina, one of your colleagues, yesterday, saying that even putting the results through an AI model didn't anticipate the scale and scope of the reaction by market participants.
Oh, it actually 3 out of the 3 models we used across. And we used Claude model, we used the new Grok and GPT. They called it up on the day, all 3 of them. So look, it's
showing that there's still need for humans in there
somewhere. Still need for humans in the market there somewhere. So
good for us. So that was CSL. Look, James Hardie, you mentioned signs of the U.S. economy slowing. I think Blind Freddy could probably see that.
Yeah.
The housing market there, they've done this big acquisition. Is there some fault to be had there in terms of missing guidance by that much?
Absolutely. Home builders in the US have actually been rallying quite solidly for the last 2 months. We're not really in that space at the moment, to be honest. But had we been keen on the space, I would have been inclined to buy James Hardie into earnings, to be brutally honest, given how well the home builders have been going in the US. So. That was a big outlier. I think the move's over exaggerated. They missed by 10 or 15%. I don't think the 30% move's quite warranted. But but again, same as CSL, I think they're both very much buyers long term. However, the momentum now has turned. You've got to wait till the next earnings, and it'll probably sit down here for a week or more before it starts to turn around and bounce. Or that day 3 bounce has been quite common in some stocks that have, BlueScope looked like it beat against nearly all expectations we saw, and 2 days of down, and then now it's starting to recover.
Boy, the market's a fickle old thing, but we're always told the market's ultimately right. Today, Centuria Capital, I spoke with the co-CEO, John McBain, and I thought it was a good conversation if anybody would like to listen to it online. He reckons they're in a bit of a purple patch right now. And they've got some AI exposure there. So shares today, day after, up by 12%. Stockland, as I mentioned, hitting the 17-year high, which is pretty good. REITs are on fire. Falling interest rates not doing much damage as well. But, I mean, what does this mean for some of the others still yet to report?
Well, it's too late now. We had it in this yesterday, but Goodman Group is by far best in class. And I would imagine they've got earnings tomorrow. And that cap raise was done around the $37 mark, and it hasn't really recovered anywhere near the same way that a lot of the other REITs have. But yeah, it seems to be very positive in across the. I think Charter Hall had decent results. Dexus had okay results as well. So I would expect Goodman to probably do extraordinarily well. They normally are the leader in the space. They normally do very well over earnings, and I've seen on many occasions they jump 10% plus or more. Not saying it's going to happen. Not that you could buy it now anyway, because we're now closed. But but I would expect good things from Goodman tomorrow. A bit more clarity on their AI data center plan, and there's some leading indicators for Goodman as well. When they are hiring, Citigroup does this indicator. When they're hiring. And they're advertising for a lot of jobs, it usually means, because they're quality operators, it usually means the next 6 to 12 months is an absolute gangbusters for the company. And they have been advertising an abnormally high amount of jobs globally. All the signs point to positive for Goodman's tomorrow. Probably be made a fool of, who knows? But that sector overall has been very, very solid.
Yeah, I mean, add Vicinity Centres into that as well. Okay, so are there any results that you're really hanging out for now? And I'm not, stealing the wind out of the sails. We've had quite a few of the big names, the BHPs, the Woodsides of the world, CSL, James Hardie. Are you really looking forward to a Wesfarmers coming out of the retail space? Or?
No, we're not really. We're not really in the retail space at the moment. Most of the mining stuff's been done now. There's not a huge amount we're hanging on. Most of the earnings we've had, and as I said, we're sort of on the sell side just because of that seasonal weakness. But I think Telix I think is tomorrow as well, and GQG Partners on Friday, because they've both been recently downtrodden, and which I do believe is a fair bit of an overreaction, and any sort of positivity there may see those head higher, and because I don't think there's probably much downside necessarily left.
Okay, so on that, just before I have to let you go, it's been a long day for the crew here.
Yeah, absolutely.
When you think about, being on the sell side, tough time seasonally, September, October, are you talking sort of a 5% correction, 10% correction, and would it be a healthy one?
I think it would be very healthy for the market. Currently there's probably 7 or 8 key indicators, and I won't list them, but that are very reliable in terms of essentially saying the market's overvalued, and every single one of them is either at overvalued or at extreme overvaluation, particularly in the US more so. We're a much lower PE market here. But I just think as well, obviously leading into September is seasonally the worst month. On top of that overvaluation, we're starting to see a rotation out of tech in the US. It was very clear. I think the Dow's up 1% this week versus the Nasdaq being down 1.5 to 2%. We haven't seen a rotation like that for a while. And the market, money going back to the broader market. So I think a correction would be healthy, because if we stay here and keep going higher, I think it just sets us up for a harsher fall in the long run. So, the market, but we recently did a study, markets pre-2009, when we obviously went to zero interest rates, and then post-2009, we don't have periods where we go sideways anymore. We either overextend to the upside or overextend to the downside. So they're whereas in the olden days, and I've been around a while, we would probably sit flat for 2 or 3 months, and that basically it's been 30. It's been 30 years
for so long. The olden days, yep.
But so you realistically, you do need to more so preempt it these days, and they are harsher. So look, when there's probably what would be reasonable might be 5 to 10%. Will probably in a 2 to 3 day period peak be about 15, say for instance. I wouldn't expect any more than that, but I do think that it would, like I said, I do think it'll be healthier for the overall market, because you've also, don't forget, we've had 2 or 3 years, and that's the best 2-year run since 1996, the last 2 years. It rarely ever does a 3-year run, so the market does need to stabilise and settle for some period. But everything moves faster these days, so but it bounces back faster. Yeah. And you should get that. I dare say, if we have a nice little correction of a reasonable amount, I think that'll make for a much better Santa Claus rally.
Got it. Mark mentioned Santa Claus rally. We're not even through reporting season. Feels like the olden days. Have a good one. Have a good night. Just have visions of Little House on the Prairie coming into my mind right now. Okay, stock of the day, Superloop. I spoke with our experts, Andrew Veitland from DP Wealth Advisory and Henry Jennings from Marcus Today.
I had a pretty good run on the back of anticipation of these good results, and the results weren't bad. And I think we've seen a lot of shoot first, ask questions later. We even saw it with JB Hi-Fi when those numbers came out. It had a big drop. Did also coincide with Terry Smart as well announcing his retirement, so I think that played into it. Then the following days it started to just tick higher and higher again as people went, you know what, it's JB Hi-Fi. I'm not sure the same thing is going to happen with James Hardie or with CSL, but Superloop, I don't think there was anything really here to worry about on a day when tech is under a little bit of pressure as well.
This is delivering, it's above guidance. They gave updated guidance in June, and then they basically delivered above that again. So they've done the copybook. You'd expect it to pull back a little bit, because again, some of these fund managers, and I know it's different realms, but some of them might be smarting from the pain they've copped in other positions, so they'd also be trying to take a little bit of profit along the way as well. So I guess as an investment, I tend to look at it and say, well, it's got a 4% return on shareholders' funds, it's a 3% margin, so it's probably not a strong financial business, as in I'm not suggesting it's not strong, but it's not delivering good results compared to others.
So that was an assessment of Superloop. As I said, I spoke with the CEO, Paul Tyler. He's pretty confident going forward. The stock price has run hard into the result. So keep that in mind. Make your own decisions. All right. Before we get to the leaders and the laggards, I just want to get you across this because genuinely this is your last chance to register for our next virtual investor event. It's called Essential Alternatives. It's the 4th year we've run this event. It's proved very popular in the past. So what it is ideas for you in private markets, private credit, agriculture, we've got dairy, we've got crypto, we've got more. So you'll be hearing from experts that manage literally billions in private markets, including one of the world's largest alternative asset managers. So your front row seat can be guaranteed. Ideas aplenty at ausbiz.co/essentials. That's ausbiz.co/essentials. And a huge thanks to our presenting partner, LGT Creston. All right, let's get across these market leaders. Drum roll, please. HMC Capital, after a dismal performance yesterday, clearly the market reassessing after some broker upgrades, up by 17%. Centuria Capital, I mentioned, I spoke with them today, up by 12%. The Lottery Corp hit a record high by 8%. Stockland, a 17-year high. We spoke with the CEO. We'll get that up online for you shortly. And good old Nine Entertainment up by 4.6%. I don't know why, it's not reported. Flip side to that equation, James Hardie, absolutely shocking performance there. Clarity, it's a yo-yo. Yen coal down. Iluka, its half-year results disappointed. And I just Googled Linus and looked on my Refinitiv. I don't know why it's down so significantly today to $13.90. I hate saying I don't know, but I don't. All right, in the small to mid-cap space, let's take a look at Lynch Group, so takeover offer and solid results. Cosol, it reported up by 9%, and Platinum Asset Management up by 8.6%. Flipping the page, let's check it out. Step 1, down by 25%. You know, credit to the CEO for coming in to speak with us. Sometimes it's difficult after a share price performance like this. Retail Food Group reported down by 16%. Tonight, we get inflation in the EU, we get inflation in the UK, we hear from the ECB President Christine Lagarde, and in the US, we get FOMC meeting minutes ahead of Jackson Hole, keenly awaited on Friday. US earnings, so retailers dominating, TJX, Lowe's, which is, you know, sister to Home Depot, Target, as it's known, and Estee Lauder and Baidu as well. So tomorrow we get global PMIs, and I feel like I'm just going to dig my hole if I start reading all of these results. We've got Auckland Airport, we've got Bega, we've got Brambles, we've got Coden, interesting, we've got Downer EDI, Experience Co, Goodman Group, Helios, we've got we've got MA Financial, we've got Megaport, we've got Northern Star Resources. The list goes on and on and on. You'll have to trust me. Universal Stores as well in the retail space. Some companies trading ex-div as well, so keep that in mind. AMP, IAG, JBH, and Washington H. Soul Pat. So some of those early reporters trading ex-div tomorrow. Look, final check in on this local market. So it still is and did outperform most major indices around the Asian regions. We can take that. But lost a bit of momentum into the close. So that is the CIBO Australia Index on your screen. More muted gains for the S&P ASX 200. It's up by 0.25%. I'm sorry, I'm losing my words at this time of the day. Just 4:30 or inching on that on the 20th of August. We will be covering all of those results for you from 9:45 a.m. when we're live tomorrow. Hope to see you then.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.